Hello folks, welcome to Pro Trader Strategies Market Commentary for Monday, May the 24th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environments, and how those impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these market commentaries, but I'm also going to talk about the option strategies I'm implementing into my portfolio based on the assumptions I come up with in my market analysis. And for you folks, I've streamlined the process for you guys to spot the optimal option strategy for any given assumptions. We aren't just always picking an option strategy out of the hat here. What we do is we look at the internals. We look at what the pricing of these options are, and that tells us what kind of strategy we need to be implementing. And I show you how to do that quickly and easily using logic, folks. That's right. All right, let's get on with the economic data. Well, it's a basic entire European holiday, even Canada's on holiday, so not a whole lot of economic data coming out. It's a Monday. We do have all kinds of Fed governors speaking today and this week, so keep your eyes out for that. Bernard is one of them that I'm thinking. Bostic, I think, is another one. And then the rest of the week is really what we are going to get more so than even economic data. It's pretty light for economic data for the most part, at least for the, the really important economic data points. So we're going to be looking at those Fed governors, seeing how they're talking about the tapering of the Fed and interest rates. All of those things is going to be really what we're going to be looking for. One of those things to keep an eye out on, I've been talking about the equities. They're going to be trending sideways for the better part of 2021. I still haven't changed that thought. We are going to get these back and forth whipsaw sector rotations, all of those things. But I said since the beginning of the year, I think at the end of the year, we're going to end up in and around very close to where we started out, folks. So great opportunity for swing trades, and I'm doing a webinar on that right now, so please check that out. Oh, one other thing I forgot to mention, smash that like button for me if you would. It really does help out. All right, so economic data, gone. We're watching for Fed governors speak. All right, crude oil moving a little bit higher today, up $2. It wants to hold on to that 60 handle, folks. Like we tested it a few times last week. Even the 50-day simple moving average, a lot of things showing some bullish moves here. Or not really bullish moves, but strength in this underlying. We can see that with this. Let me pull up my pen here. We have tested the Fibonacci right here, the 78 Fibonacci, several times. It has shown support and resistance. And when you're talking about swing trades, things of that nature, right here, we've got this bottom where you had on Friday the engulfing pattern to the upside back above the 200-day simple moving average, and testing that 61 handle there, that Fibonacci. All of those things were very bullish. Now today, getting confirmation. I'm expecting us to probably be eyeballing a 70 handle, folks. It looks pretty strong right now as being testing several support levels, showing that strength. $70, not too far away, 52-week high, but that's going to be the line in the sand for crude oil is $70. That's what I'm going to be eyeballing. We probably will see some resistance in and around this area, but a blast above that, I mean, it's a sure thing almost, right? All right, and then let's talk about a couple of other markets. We've got gold futures pretty much unchanged on the day. Bitcoin making a move to the upside. Friday was pretty weak right into the very close. Seeing some strength today as we are just slightly below this 50 Fibonacci. Now that's going to be something technicians are very keen on, is keeping an eye on this line in the sand, which is lining up with 3,700. We'll just call it, that's a psychological level even, that we're going to be looking to try and get up and stay above there. So right now, just below our Fibonacci, getting above that 50-day is going to be pretty key for the 52-week. All right, and then let's talk about what else we got up on the docket. Bonds, they are moving higher. This Fed speak is going to probably B, we're staying on course. Yes, inflation's transitory. We don't see anything with the buying of assets. I think that's going to kind of be what we hear. That's going to calm us down a little bit because there's going to be a bit of a fight back and forth with the people that think the Fed don't know what they're talking about and the traders that are trying to follow their signal. Something else to note, the 60 handle is a psychological level that if we break above that area, then that's going to, probably be because we're seeing a very dovish Fed. All right, dovish means that they aren't worried about inflation, so we could start seeing that 60 handle. Now, that to me is a signal that the interest rates are going to stay really low for very long. And I've talked about it. I think that interest rates are a little bit high right now, especially if we're only seeing transitory type inflation. All right, VIX coming off 50-day simple moving average, lining up quite nicely with that 19. I want to stay in the teens, folks. We want high volatility, right? It's opportunity. All right, Dow Jones is positive on the day, up almost 200 points right now. The broader markets are seeing a lot of strength. Tech doing much better than the rest as they were seeing the most weakness. Back into some of these semiconductors and the chip sector making the moves to the upside with the NASDAQ up 200 points on the day. E-mini S&Ps up 42. So all of those chart setups that we were looking at on Friday, and it was looking like confirmation kind of city, right? Well, we didn't get any of it. All of these moves to the upside Friday, having those candles that look very bearish, like this, that's usually a top of a move. Well, it's not really a top of a move, but it's up near a top of an area where we're seeing resistance and we see that momentum slow down. Well, today, that move to the upside completely negates any type of topping pattern there, right? So that's what we saw basically across the board. Let me just flip back to the NASDAQ because we saw that show up in the NASDAQ, the Dow Jones, the NASDAQ there, breaking that what would look like a topping pattern there, and the Dow Jones futures. Not quite as much of a topping pattern in these two, but when you start looking through and you see that show up over there in the E-mini S&Ps, then normally as a chartist you would start seeing that weakness across the board. But like I said, with this move to the upside today, that strength is completely negating all of those chart patterns there. All right, E-mini S&Ps seeing some weakness for the first time today after just strength right off the open from over the weekend. One of the things that's making some of these moves to the upside, Biden was talking, saying he was opening up Alaska. So cruise line ships are making some moves to the upside. And that was also causing some other broader markets to get a little bit of lift as the hope of opening up is sure to come. Lululemon making a move to the upside, thankfully today. We did test 320. I started getting involved. Now that's right when we started seeing some weakness. I've got an order in here to get out of this. Now, if you guys remember, this whole thing was with the earnings trade. Or actually, it wasn't an earnings trade. It was just a trade in general. But I had gone into the May, went into the May and sold the 320 puts in there. So going into the May 320 puts here. So May 320 puts. And I did this on the 7th. So we're basically looking at a couple of weeks away here. In and around this area, I'm guessing, without having the exact date. It actually might have been on this setup right there. So May 320 puts, and I sold those 320 puts for $3.30. All right, so market obviously comes down Friday. I was talking about this. What am I going to do? I'm covering the puts for a loss, basically, and buying the stock. So I ended up getting long that stock right around at the very end of the day, $311, and I ended up losing money on these puts. But what I want to do is, and then bought the underlying, right? Ultimately, what happens is when you sell these puts, I am selling puts, which means that I am willing to buy at that level. I'm willing to buy the underlying at 320. Now, when the underlying, I'm willing to buy it at 320 and it's trading, let's just say around 310, my puts are worth basically $10. It's the difference between where I bought them and on the last day with all of the theta decay and everything else. It's the value of those puts, really. So they were, let's say they were worth $10. So I offset the puts, lost money there, bought the underlying in the open market right around, let's say, 310. All right, so lost $10. So now, synthetically, that says that I am long at $320, right? I lost $10 on the puts, bought it in the open market. So it looks profitable immediately today because it's up on the day, but I know my break-even location is right around 317. Why? Because when I sell these puts, when I sell these May 320 puts, I collect a credit of $3.30. I get to keep that money. So that means I lower my break even, then my break even on this trade ends up being, what is that, 316.70 is my break even on this trade from inception. So let's just go with that as it being easy. I'm long at 320 because that's really where it is in my head. I collected the $3.30 for this trade. That was my break even at the beginning at any given time. Now we know that I bought the underlying, lost money on the puts. But if we look at it this way, I'm long at 320. I got to keep that credit. My break even is still here. Even if we look at it, folks, as the ones where I lost money. Remember, if I said I got out for $10 because the underlying was trading around 310. I got short these puts at 320. They are worth $10, right? But I collected that $3.30 credit immediately off of the beginning of the trade. So the loss on that trade was $6.70, right? So if I then say I bought the underlying at 310, my total loss so far in LULU on this trade is $6.70. That's what I need to make up. It all comes back down to 316.70 is the number, folks. Whether I look at the loss on the trade or I just focus on as if I got assigned. It's a little bit less messy this way. So right now we can see we're trading right around 318. Once I saw that 320 print, the chart setup started looking bad and rolling over. That's when I put in my order to get out at 320 on these, just to get out. But I know my break even is a little bit lower as of right now, so I could always just pull the ripcord and play it that way too. So I haven't made that decision as of right now. I think that we're going to probably hang out here, and it'll be a good opportunity to really start doing like covered call strategies and really lower my cost basis on this trade. So I'm playing that all by ear right now. I'm going to have to play that, minute by minute really and see how I feel. That's about all I got for you guys. Other than, smash that or take that. Oh, check out the disclaimer. All right, bye for now and take it easy.